Hello everyone, I am Dr. Nagalaxmi, Assistant Professor, Department of Commerce with Finance in the esteemed institution Dr. SNSINSTITUTIONS College of Arts and Science Autonomous, Coimbatore 49. Now I am here to explain a concept in partnership accounting. That concept is none other than amalgamation and overview. Now we are going to see what is meant by an amalgamation with an example. So the example itself makes us clear what is an amalgamation. So there is a company A and a company B. A is a company which is an amalgamating company. B is also an amalgamating company. When the process of amalgamation is done for these two companies, the amalgamation of company A and company B, this amalgamation results in the formation of a new amalgamated company called as AB. That is, A is a company, B is a company, both companies join together under the process of amalgamation. Now that A company and B company now termed as AB company after amalgamation. Now we are going to see an important concept in that amalgamation is a purchase consideration. Purchase consideration is nothing but the amount settled for the shares and securities of the shareholders of the transferor company by the transferee company. See, now we can see the exact meaning. Purchase consideration for the amalgamation means the aggregate of the shares and other securities issued and payment made in the form of cash or other assets by the transferee company to the shareholders of the transferor company. What I explained before. There are 4 methods to calculate purchase consideration when the process of amalgamation is done. One is lump sum payment method, the other one is net asset payment method, the third one is net payment method, and the fourth one is intrinsic worth method or swap method. First method we are going to see is the lump sum method. When the transferee company agrees to pay a fixed sum to the transferor company, it is called as lump sum payment of purchase consideration. See, there is an example for it. If X Limited purchases business of Y Limited and agrees to pay rupees 25 lakhs in all, it is an example of lump sum method. Totally, when a purchasing company is saying that I will be taking your company and I will be paying you 25 lakhs. That 25 lakhs includes all of the purchasing company. That method is called as lump sum method. Now we are going to see the next method, that is called as net asset method. So net asset method, net asset, there is a formula. Net asset is equal to excess of assets over liabilities taken over. So excess of assets over liabilities taken over. If consideration is to be ascertained under the net asset method, it is necessary to determine the fair value of those assets and liabilities as are actually taken over. First, for the process of calculating the purchase consideration, the exact value of the assets and liabilities which are taken over by the transferee company should be valued, ascertained. What are the assets and what are the liabilities taken over by the transferee company at agreed value? Under assets, goodwill, land and building, plant and machinery, data, stock, cash and bank values. Balance. Less. Liabilities taken over at agreed values, creditors, bills payable, bank overdraft, debtors, debentures, etc. These are the assets taken over and these are the liabilities taken over. Assets taken over minus liabilities taken over will be the net asset. Now we are going to see the next topic and the next method, total payment method or net payment method. Purchase consideration is equal to total amount, that is the money value of equity shares, preference shares and cash received from the purchased company for the shareholders. The shareholders includes equity shareholders and preference shareholders of the transferor company. So the purchase consideration includes, what is meant by purchase consideration? What are the things that is included in purchase consideration? That is the total money value of the equity shares, preference shares, cash received from the purchased company for the shareholders of the transferor company. That is the amount of preference shares. Amount of preference shares, how you ascertain? Number of shares into issue price plus cash for the preference shares plus amount of equity shares plus cash for equity shareholders. These things are included in purchase consideration. So there is an important note. Nothing is deducted. Whatever is received from purchasing company is added. Purchase consideration will not include any payment made to debenture holders or other liability by the transferee company. Apart from this, any other liabilities are there for the transferee company, that will not be included in purchase consideration. The last method is exchange method or swap ratio method or intrinsic value method. The intrinsic value is the amount per share which equity shareholders are expected to receive if company goes into liquidation. So the company is now going to get dissolved. At the time, what is the amount paid to the equity shareholders for one share, that is for per share? That value is said to be intrinsic value. In this method, purchasing company takes over the business of the transferor company on the basis of the ratio in which the shares of the transferee company are to be exchanged for the shares of the transferor company. The exchange ratio or swap ratio is based on intrinsic value of each company share. I think you are clear with the 4 methods of calculating the purchase consideration. Thank you. Thank you so much for your patience listening.